Both sides matching words from action, and I don't know about you, but I'm kind of wondering what comes next after China runs out of US imports to put tariffs on.
That's the key question, isn't it? I mean, the sense you get here in China from the officials, but also from business leaders that I've been speaking to, is almost a sense of resigned fatalism that these tariffs are going to continue to play out. And obviously that is a concern for both sides. So the details of this latest $16 billion, look, it's not a surprise. China said it was going to hit back with these $16 billion at the same time as the US to match them. That will happen August the 23rd, just a minute after the US imposes their additional $16 billion. You're talking 333 different US products that the Chinese will be targeting as part of this latest round, including things like coal and cars and even some medical devices. A broad range, in fact, more products than had been initially part of the June the 15th list from China. So what you're looking at getting towards the end of August is both sides having $50 billion worth of goods with additional tariffs baked in, locked in. And then, of course, you're looking potentially as early as a month later, maybe even sooner, middle of September, you could be getting $250 billion of Chinese goods targeted by the US, depending on how that review goes in Washington, and then $110 billion worth of US goods being imported to China that would be targeted. That is potentially the state of play come middle of September. The economic impact has been outlined by the likes of Oxford Economics in terms of global GDP, just reminding viewers that you could be looking at a cut to global GDP of about 0.7% as a result of this US-China trade war by 2020. You could be looking at a cut to China's GDP of about 1.3% and US GDP by 1%. So the impacts are there, and as you mentioned, there could be additional steps that China could take. There is no, it seems at this point, any plans for official talks, and that is a concern.
Yeah, that's interesting, isn't it? Because, the leaders of both nations, both Trump and Xi, tout their growth. They know this is so important to their supporters. But these latest tariffs fall heavily on U.S. fuel products. Do the Chinese risk shooting themselves in the foot to a certain extent with this?
Well, it's certainly not risk-free if you bear to mind the fact that China imported 4.4 million barrels of fuel products from the US just in the month of May alone. They're the largest importer of US crude. They imported about 15 million barrels of US crude in June. Now, US crude is not on the list yet, but nonetheless, what is on the list are things like diesel and propane and gasoline, and you saw the impacts on the markets there. It's a risk as well because China remains heavily dependent on many of these imports from the US. It's trying to strengthen its ties with companies like Saudi Aramco in the Middle East to increase imports of some of these products from there, but it's going to take some time. It was interesting that some of the major gas and oil explorers here came out with a statement saying that they'd been told by President Xi to increase their exploration of goods, of oil and gas in order to ensure the country's energy security. But in fact, their production has actually been going down in the last 3 years. So there's a lot of work to do. So certainly risks for China from this move to target US energy and fuel products.